our group presentation will analyze the Berjaya Corporation Group. First of all, I will introduce about the Berjaya Corporation Group. For the Berjaya Corporation Group, the owner is Dato Sri Vincenten. The Berjaya Corporation Group of companies history data back to 1984. In October 1988, following a major restructuring, Berjaya Group Berhad became the holding company of Raka Pacific Berhad. In 1969, the company gained official listing on Bursa Malaysia Security Berhad. On 26 May 2010, Berjaya Corporation was added to the Morgan Stanley Capital International Malaysia. There have 8 core business of Berjaya Corporation Group. They are consumer marketing, direct selling, and also they have financial service, hotel and resort, vacation, timeshare, and they also have the gaming, lottery management, environment service, and clean technology investment. And also they have a food and beverage, property investment and development, and also they have investment holding and others. For the significant activity of Berjaya Corporation Group, it is Berjaya Founders Day. At the first year, this activity gained 1.6 million Malaysia ringgit. At the second time, in 2012, this activity gained 11.6 million Malaysia ringgit. And the third year, at 2013, this activity gained 20.2 million Malaysia ringgit to the society.
Part 4. This is the calculation part, and we calculate all the ratios related to Berjaya Corporation. And we share the links of the annual report of this company. These are the income statements and balance sheet from 2011 to 2013 of Berjaya Corporation. This is income statement of 2011. And the balance sheet of 2011. This is income statement of 2012. And the balance sheet of this year. This is income statement of last year. And the balance sheet of this year. All the calculations figures are come from those reports. And these are the ratios of Berjaya Corporation of 2011, 2012, and 2013. Based on these figures, we evaluate them, and our decisions depends on these results. These are the ratios we calculated, and we evaluate them as good, poor, and okay. Some of them are not so good, while most of figures are not so good as we expected.
So for this part, we divided into 6 points. The first 3 points I will present. So for the first point is repayment ability of Berjaya company. So for the current ratio, it's a measure of the solvency of the most commonly used short-term debt ratio, and it's a measure of the risk of short-term business indicators visible from the calculation of the index. If the current ratio is higher, it means the liquidity of assets is greater and the short-term solvency is more stronger. So the Berjaya company's current ratio of year 2011, 12, 13 are 1.06, 1.35, and 1.02. So normally its current ratio should be between 2 to 3. But for Berjaya company, the 3 years current ratio are about 1. So it shows a little poor. And for the quick ratio, normally the quick ratio should be maintained about 1. It shows when current liability have one liquid assets. If the quick ratio is greater than 1, indicating that companies have the ability to repay short-term debt, but at the same time also shows that too many companies have not profitable cash and accounts receivable. If the quick ratio is less than 1, companies will rely on the sale of stock or borrow new debit to repay maturing debit. The Berjaya companies quick ratio of year 2011, 12, 13 are 0.89, 1.11, and 0.83. It shows the Berjaya company's repayment ability is poor. So for the second point, financial position, debt ratio reflects the total assets financed by debt ratio to measure the extent of the protection of the interests of creditors of companies in liquidation. So for the Berjaya company year 2011, 12, 13, debt ratio 39.6%, 42%, and 44%. Debt ratio reflects the creditor provided the proportion of the total funds as well as the level of protection of the interests of creditors of corporate. It shows the Berjaya company's debt ratio is low. For the gross profit margin and net profit margin, the two indicators reflect how much revenue profits. Net profit margin indicator shows the combined effect of the use of corporate assets. Return on equity reflects the owner's equity return on investment. These indicators have a strong comprehensive can fully reflect the overall profitability. For the Berjaya company year 2011, 12, 13, gross profit margin are 38%, 38%, 33.5%, and the net profit margin are 8.8%, 9%, 4.41%. This data can show the Berjaya company's profit is low. So for the third point is liquidity including monetary funds, accounts receivable, and inventory. So for the inventory turnover, a low turnover rate may point to overstocking, obsolescence, or deficiencies in the product line or marketing effort. However, in some instances, a low rate may be appropriate, such as where higher inventory level occur in anticipation of rapidly rising prices or expected market shortage. So a higher turnover rate may indicate inventory levels, which may lead to a loss in business as the inventory is too low. So this often can result in stock shortage. So the last is for the Berjaya company's inventory turnover in year 2011, 12, 13 are 6.04, 5.31, and 5.48. This data shows the Berjaya company's 3 years inventory turnover is okay.
The part 4 is talk about profitability. Profitability is the primary goal of all business ventures. Without profitability, the business will not survive in the long run. So measuring current and past profitability and projecting future profitability is very important. Profitability is measured with an income statement. This is essentially a listing of income, and it pays during a period of time for the entire business. Compare with year 2011 and the year 2012 income statement. Based on the data, it shows the profit keep growth. An income statement is part of business profit and loss statement, including the balance sheet. The income statement shows the total income, including assets and liabilities. The reason for us to focus on income statement are they show the worth of the company or personal holdings. They can be used to apply for loans, assistance, or similar matters. The part 5 is talk about improve employee productivity. Staff welfare has always been accorded high priority in Berjaya. The group and its
subsidiaries constantly strive to improve the quality of life in the workplace by focusing on their employees' well-being and career development. In order to improve on their productivity and develop their skill sets, employees are encouraged to participate in various training and development programs relevant to their area of work. A staff welfare fund was set up under the BCF to manage and supplement financial aid to staff and their families in times of crisis and need due to illness, natural disaster, and death. Part 6 is analyze Berjaya Group perspectives to generate constantly profit returns for our shareholders from investments in core business activities. By providing direction, financial resource, and management support for each operating unit. These units are through establishing a major market presence of each activity. Through establishing a major market presence of each activity, through dynamic and innovative management, teamwork, and a commitment to excellence. Moving forward, Berjaya is committed to building social consensus and responsibility as an integral part of the organization. The group will look towards encouraging sustainability by engaging with NGOs and charitable organizations on projects which will promote community growth and development. Berjaya aims to adopt a more holistic approach in helping deserving communities, whereby the money contributed will help them to build their skills, and in the process, empower them to create a more sustainable future for themselves.
In conclusion, our group considered the elements which are the repayment ability, financial position, liquidity, Berjaya Group perspectives, improve employee productivity and profitability to make our decision. That is not invest in this company. Actually, the two members profit investing in this company. The reason is that firstly, the stock price is cheapest in this year, so it's better to buy stocks. Secondly, they found that the revenue is keep rising, but the net profit is not well, because the Berjaya lose money in the depreciation, debit, and invest. We can from Berjaya Group perspectives improve employee productivity and profitability. To analyze Berjaya, it has ability to solve the negative figures in the future. But our major of members are disagree invest in this company. Firstly, from the repayment ability, we found the highest ratio in this 3 years is 2012. In this year, the Berjaya have more current assets, but on the other hand, the current liabilities is higher than other years. These 3 years are lower than normal current ratios range, which is 2 to 3, and the quick ratio is less than 1. It means Berjaya repayment ability is unaware, and we're not sure whether Berjaya has ability to pay their debits. Secondly, we use debit ratio, gross profit margin, and net profit margin to analyze their financial position. Even though Berjaya company's debit ratio is lower, but the data is an increased trade. The gross profit is okay, but the net profit is poor. It shows company has a lot of liabilities. Overall, our group considered most of ratios we got from Berjaya. We thought Berjaya's financial is not stable and the profit is not enough for their future development. So we decided to not invest Berjaya.